Gold had something of a roadrunner moment this week. Having edged up $60 an ounce despite quiet physical demand last week, gold then did its best Wile E Coyote impression on Wednesday, falling off a cliff as Federal Reserve Chairman Bernanke appeared before Congress. The markets seemed disappointed that the Fed chairman did not give any strong hints that further quantitative easing was on the way. Bernanke also repeated the Fed's 2% inflation target unveiled back in January. The Federal Open Market Committee had discussed setting an inflation target back in November. Minutes from that meeting state that the committee noted that such a step could be misperceived as placing greater weight on price stability than on maximum employment. This week, however, Bernanke seemed happy to take such a risk. Given the absence of strong physical demand, gold and silver were always vulnerable to a bit of dollar strength, which Bernanke's comments appeared to provide. Wednesday's drop will also have been exacerbated by trading stop losses placed during gold's recent rise, but it also suggests that much of that rise was based on expectations of further Fed policy easing that may now have been dashed, at least for the meantime. Despite the drop, Wednesday's PM London fixed price of $1,770 was the second highest month-end fix in history, although the fixing did take place just as Bernanke had started speaking. Friday's PM London fixed gold price was $1,707, a 4% fall on last week. Silver's Friday fixed price was $35.21 an ounce, a weekly fall of 1%. Unlike gold, however, silver was still showing a monthly gain on Friday, up 3.8% from its fixed price on the first Friday in February. The gold-silver ratio has fallen sharply since the start of last month, thanks largely to silver's big upward move begun at the end of last week. The other big monetary news this week was the European Central Bank's second 3-year liquidity operation, now widely being dubbed the LTRO. European banks borrowed nearly 530 billion euros, an 8% increase on December's LTRO figure. It remains to be seen how much of this will find its way to the real economy, with much of it currently parked as ECB overnight deposits. Next week sees a host of employment data from various countries, culminating in US non-farm payrolls on Friday. To keep up to date with the latest in gold and silver, as well as the wider markets, visit goldnews.bullionvault.com.